You all right there, buddy?
Hello, mate.
We all good?
Ah, mate, unbelievable.
Oh, look at that. That is looking great.
Oh, the pound's looking pretty. Actually, everything's looking pretty good at the moment. It's been a
Yeah,
pretty
looking
bright
lovely,
start
mate.
to the week, to be fair.
Oh,
Very,
yeah.
very, very interesting. Not and entirely unexpected, I've got to say. I wasn't expecting such movement as this as early in the week as it is. Anyway,
No.
we will take it whilst it's there. G'day, everyone, and welcome to Live and what's this called? US, Learn to Trade Live, US Open style. And this is kind of the preview show to that event with about 1 hour to go before the US market does open for the day and the week. And, well, are we going to have a decent week? It's a very, very difficult proposition, really. If you have a look at what's on offer in terms of news events, let's do that now. And here we find that we've got lots of people talking. Now, they're important people, it must be said, but they're talking. And when people stand in front of a microphone, in front of Senate committees and financial committees and all those sorts of things, the world tends to pay attention, and we can get some rocky roads, I've got to say. And that's pretty much the case this week. We've got Powell speaking about 14,000 times, and all of the Fed board, as a matter of fact, are talking at an event called the Community Reinvestment Act. So they're talking about rulemaking for the Community Reinvestment Act. I have absolutely no handle on what the Community Reinvestment Act is, but I suspect it's something new, given we've got no history on it. And maybe it's how we get out of COVID or the other side of COVID. I don't know. It's purely a guess. Anyway, the whole point is we've got speeches being made all over the week. And that could, as I say, depending on what they say, when they say it, how they say it, the inflections they use, as to what may take place in terms of the market and what it sees. Headline events outside of that, we've got on Wednesday the RBNZ rate statement, widely tipped to be bearish, not necessarily going to be a rate cut this time, is the mail that we're getting out of New Zealand. And but the statement may well point towards a zero interest rate on the horizon, not too distant horizon, as I understand it. That is supposition and speculation, of course. So, take that for what it is. If you know a little bit more than I do, then by all means take a position based on that. But that's as best as I can do. We've got PMI number of figures coming out from Europe on Wednesday as well. We've also got another interest rate announcement somewhere, I think, this week. Is that right? Yeah, the Swissy. So we've got the Swiss National Bank will be making their little statement also. We've been fortunate to be riding the Swissy down versus the yen at the moment. We've got plenty of profit in the bank on that. Maybe it's worth well, it's a good question. Is it worth keeping our stops wide on that in case we get a nice little rundown as a result of the SMB monetary policy assessment? Good question. It's a long way off, I've got to say. It's on Thursday. We might not even still be in the trade, but let's assess that when the time comes, I think. And as I said before, lots of speeches around the Fed and what we might expect from them, perhaps in their next round of statements, which of course is about 5 weeks away. Rightio, just an update, I suppose. We have, as we saw there on my shared screen earlier, we have got one running on the breakout trade that we trade pretty much every day in the UK session. That's broke through on the hourly chart. We traded this bar here, and that's powered on. We've taken TPs 1 and TP2, and that is, of course, up to you how you manage TP2. TP1 is compulsory, if you want to trade it the way I'm trading it, and it is in beta test mode. This is not a proven strategy at this point. What we're doing here is taking a first profit at half the risk that we take, and we're taking half off the table, moving our stops to a safe place so we can't get a loser on that once we do hit TP1, and that's where the profit starts to come in, and you can pretty much micromanage that yourself. TP2 is the suggested number, at which time you should be moving your stops to entry, and take some money off the table if you want, or let it run and see if we can get a really good banger out of it.
Oh, it's been a lovely move, that, mate. I mean, it's not every day, as you say, that we get these, and this is the benefit, really, I suppose, of having a. I know necessarily with the pound, the directional bias comes from the setup, but having a directional bias and not trying to necessarily sort of put too much pressure on yourself for timing a move like this means that when these do happen, then you can just ride them, can't you? I mean, it's an absolutely fantastic move, and I agree with you. I think it's really now down to whether we get the help. But it seems, because it's across the board, we've seen the move. The situation with COVID, certainly appears to be one of the drivers. And now it's just whether we can get some extra help if the dollar continues to look like it is going to break out. And at this stage, it's really just strengthened to the top end of the range of the pattern again. But if it can actually get a breakout, then everything will suffer. The likes of the euro, the pound, gold, silver, Bitcoin, potentially the equities as well. Everything is going to have a few problems with this. But what an amazing move we've had so far today! Just absolutely brilliant. So, genuine movement in price, which has maybe just been a little bit beyond us for a bit of a period. But now we are actually starting to get some genuine movement. We can take advantage and make some money.
Yeah, look, that's the dollar index we're looking at the moment. And I just can't get too excited at the moment because we've been upping and down or toing and froing here. And, we're putting a lot of effort trying to get through this 93
Getting close, though, isn't it?
Yeah, it's getting close. Yeah, you've got to say that.
It's getting close. I'm
on board.
Yeah, I mean, if we and the patterns there, I think that's the key thing. There is a genuine reversal pattern on some, a significant level, which we've been discussing for the last 2 weeks.
Yep.
And finally, good evening, John. And finally, we actually get the that pattern starting to. Well, it's not unraveling just yet, is it? But at least the pattern is getting to the upper end of it rather than being really sort of like pretty snugly down the bottom. But what are the trend lines saying there, mate? You got potentially two trend lines that I could see that you could draw on that. One looks like it's through. Are they both through is the question. Well, they are now. Oh gosh, that is a nice
stay there, nice little dotted thing. Really swore at the trend.
That's really nice. Look at that entry on the right shoulder of the inverted head and shoulders there. Beautiful.
Yeah, this could be the move, and if it is, then I think we're in a pretty good position to take advantage of that. Certainly on this.
Yeah,
trade.
I mean, what would you be looking at? Maybe 96. That would be a potential price point that I can see there.
I had 95 about 6 weeks ago.
Okay.
in my sights. Whether that's still relevant, I suppose it's still relevant. I mean,
yeah, show me why you were thinking 95.
On this immediate chart, you're probably through there somewhere. I can't use Trading View, so I'm likely to stuff this up, but let me see if I can. I'll move to a monthly time frame. How do you go wider on this thing?
Oh, there should be a little plus and minus at the bottom. If you bring your cursor down, it will appear.
Have you got a dollar index chart?
Yeah. Did you see it appear there, though, mate?
No.
Just there. I can see it when you bring it. Oh, hello. There it is.
Oh, yeah. Here.
Yeah, good. Plus and minus. Yeah.
It's like Peter Brady.
Yeah. Don't know who he is, but
Peter Brady. Peter Brady's the Invisible Man.
Oh, there you go.
I show my age a lot, don't I? Come on. There's a bit more evidence for you. Monthly chart. Oh, I was looking for that level, wasn't I? Oh God.
Yeah, just interested to know why you thought 95.
There was a reason at the time. Nope, I'll put another one in here.
Alan, yeah, stock's finally coming down, which is great. Finally the move in the euro dollar. Nicely done, sweet. If you're in that, that's brilliant. Not going to look too good for Donald Trump, is it? If these stocks remain at these, well, potentially pushing lower rather than, at the particular point that they are. That the Nasdaq's still got quite a lot of work to do to get down to its previous high, but it's more than possible when you think that we're already down over 10%. Maybe 15% from the absolute highest point. It's only got to drop down another 10%, and we're kind of back down to the previous all-time high that was set during Donald Trump's tenure. But still, it's not going to look quite as pretty for him, and won't be quite as good sell for him as obviously he's going to want.
Poor old Donald.
Yeah, what a shame. What you got there then?
This must be hard. If it's this hard to find, it's not a level.
What's that little L shape you got going on there?
Yeah, that's where I've got it. It's these lows here, and
Okay,
and the trade line or the trend line at the time. I think had a confluence at 95, but like I said, that may well be long gone, and it looks for my money that it is probably long gone. So it was a price in time thing, I think I was referring to, which now doesn't exist. So level to go to now. Yeah, good question. You've got 96, have you?
Yeah, 96 is what is my price point that I'd be interested in now, because when it could be actually 95.30 could be an area. I see the 95.60 as well. Yeah, the previous low that we saw back in of the month of what's that, March. That's going to be its first test, isn't it? That's about 94.50. But there's a really interesting level. It's the monthly that I'm really looking at, and that's where I come up with 96. I see that as the previous swing low on the monthly chart.
Fair enough. I'm not really seeing a level here at the moment, to be honest. But it was through there that I did see it. So that's where I came up with 95 through this area here.
Yeah, yeah.
But as I said, that's over a month ago, 2 months ago now.
Yeah, well, I mean, the main thing is that it's often running, and now it's just how we choose to try and take profit. And the big thing is not, if we're in such a good level, at such a good level, then the key really is here that we're not ever attempting. Well, to a degree we are, I suppose, but we don't need to get in at the absolute high, and we don't need to take profit at the absolute turning point. We just we can just take a nice chunk out of this, and if that goes to 95, the pound's going to continue to weaken, as will the euro if SWI is in that. As will Bitcoin that I'm obviously in, and potentially some of the others. Alan's saying that the Nasdaq is engulfing the previous month's price range, which I see that too. So, if the Nasdaq finishes up, I mean, what we're in now is the 21st of the month, and we are looking at another week and a bit to go, and it's not beyond the realms of possibility that the Nasdaq might show us a monthly engulfing bar, particularly with all these speeches, and it will be dependent now on those speeches. Those speeches will probably be a bit of a driver. Along with the continued numbers, the continued spike in numbers. But really, this is case in point how much easier it is to make money selling than it is buying, depending on what it is you're doing. Obviously, with a currency pair, it's different because while one is buying, one is selling. But if you're looking at a dollar index or something like that, then obviously to try and get rid of gold, silver, Bitcoin, an actual asset, then it comes down a lot harder than it should go up on the whole, because of the reason it coming down being the fear factor. So this at this point, mate, it's looking pretty nice, isn't it? For us to at least make a decent chunk of this move now.
Yeah, look, I didn't and had no faith in the dollar, as you know, and haven't been trading it for a long time. I've been allowing myself to take one position with the dollar in contention for the last, I think, 3 or 4 weeks.
Yeah.
And this week, it's Kiwi US dollar, but missed the boat. It's gone already.
Oh, okay. Well, you got the pound,
Absolutely
mate.
gone. Yeah, but the pound's not my cash
Strategy.
trade. It's
Yeah.
not yet a system. The cash
Yeah.
trade was the Kiwi, and we released
Yeah.
that yesterday on the show. And well, I won't say it's gone. There's still a chance we'll get the lower high that I'm looking for, but it's come off that level, and that was pretty much I won't say a no-brainer, because there's no such thing in trading, but it looked good. It did look good, and it may yet come back and have another look at that level. And if it does, happy days. But the ones from last week, and we spoke about this in the shows as well, we were very, very patient and didn't wet our gunpowder until late in the week, I suppose it was, and we managed to catch the yen trades. Dollar yen, we got into that. We've now got our stops at entry, and wow, if this can close down here tomorrow, this has got a problem. Swissy yen, which was the trade of the week, that's going gangbusters as well, has broken through the what I consider to be the important support level. I'd love to see a retest here in the next few days or so. If that was the case, I think that's a scale in. Euro yen finally hit TP1 today. That took some time. The very, very sad news for me is I'm no longer in the trade, having tightened up my stops over the weekend and got hit. Oh, foolish me. And the only other trade that we took last week was Aussie Swissy. And we have been out of the money waiting for this to come back into the range, which it looks like it wants to do today. And again, a nice little retest here of the pivots would get us interested in, well, I'm still at risk in this, but if you're not in the trade, then I would suggest that there's a potential trade coming up as a range trade back inside, retest the pivots, then you can look to trade it short. This looks to be a breakout of this very, very congested area here that we've seen through the last week. And if that's the case, then downside does look to be promising. We'll see how that one pans out. But they're the 4 trades that we are currently tracking, mates. The little bit of money that we're out of the action on Aussie Swiss has been well and truly covered by what we're doing on the yen pairs. This week, I'm a Euro bear. Not necessarily against the dollar, but against the euro, against the Aussie. I'm range trading. So I'm looking to trade this short off the top of this range. Happy to trade it long to that area. We spoke about this in the UK show. No way that I could find my way in here. That needed to be a black candle for me to trade it. And even that, the pivots are very, very tight here. It's tough to be trading a breakout in that area until it actually does break out. And it may not be. This could well be false, and we could be going back down here. So I'd like to see a retest here. Now that we've taken out the highs, a retest here would get me a little bit interested in trading it up to the monthly pivot and maybe even to the top of the range. That's number 1. Euro CAD. I've got a very, very interesting little triangle, a little ascending triangle sitting here. And I'm kind of waiting for that to break in some shape or form, either up or down, don't care which. I prefer it to break to the high side, which is where everyone will be having buy orders, and then come back underneath the pivots and retest them. And I think there's a short on the cards if that would be the case. So I'm looking to play that short, but not from where it is. I need it to give me that false break of the high side. Euro pound is the third. of 4 trades, and well, 4 trades that I'm looking to take, not taking them yet. Need to get them in the right position. This one doesn't look too dusty on the daily chart. If I have a candle that looks very similar to that tomorrow, then I will place an order underneath it, and my stop loss will be above it somewhere in a strategic position. That's the one that I'm looking for tomorrow. If it does look like that, I think I'll trade that short. And that will be probably the 4th time we've traded euro pound. Euro CAD, if that were to set up, would be about the 7th time we've traded that in the last 2 months. Euro pound, as I said, and Kiwi US dollar. That was probably the trade of the week for me. Still there, if we can just get a pull back to maybe to the weekly pivot and get that lower high. It'd be nice to see this trade line break, to be honest. It's a genuine trend line as well. So maybe we can just get break, take out the monthly pivot, back up here to give us the lower high, even as a retest of the trend line. And then we can look to trade that short. So that's kind of what my watch list is at the moment. There may be some added to that, given some price action that we're certainly seeing today. The market is having a real good old crack, and we'll see how that pans out in the morning. As I say, those daily bars tomorrow morning might look very, very interesting. What for you, bud?
Well, I mean, I've got a Bitcoin trade on right now. So what I'm really looking for is let's bring up TradingView as well. I mean, we are seeing so much movement in the market, and it really is now. We're in the management phase, and initiating trades, I think now would be pretty dangerous for anybody. But you can see that we've been extolling the potential rise in the dollar for, as I say, 2 weeks now. So it was really kind of like picking the right one. Now that I had a bite of the euro and I had a bite at a few other bits and pieces, but it's Bitcoin that is going and running, and I'm going to stick with Bitcoin. Obviously, it's taken a nice dive to the downside, but all of these really now are starting to look like they could weaken. Now the key is going to be, and it's not to say that there won't be another opportunity, but you can see gold now has been stuck in a range. Now let me just bring in that silver. So let me just bring in gold. Gold has been stuck in this range for some time, and I think there are a lot of people were waiting for gold to come out of that range, for it to be a tradable prospect. Now, undoubtedly, if gold is if gold and silver and all these are going to be breaking out this range, and the dollar is to strengthen, then these are still tradable opportunities. Now that this might end up even being potentially, I suppose it could be a false breakout. We just don't know at this stage whether it ends up being a true or false breakout. But let me just see if I've got my pen here. There we go. Where are you? I can't get my pen up. Okay, no problem. All right, we'll do it here instead. So there we go. This coming down and breaking down. Now it's gonna end up being a pretty big bar on breakout. Maybe equal to this type of one here. But obviously, the idea would be see if it can retrace and then again knock it to the downside. And we're going to have to stay pretty aware of what might be driving any of these markets as time goes on. But you can really pick your poison. But you don't have to worry about trading gold or trading the euro or the dollar Swissy, which was the other one that I really liked. Actually, I've quite liked the dollar Swissy again for a few weeks, but that one having to wait on it. This looks very similar to the dollar index, just like the euro looks similar to the dollar index in the opposite way. This is looking very similar to the dollar index, and I'll show you that in a moment. But again, we still haven't broken out of this level. So this is the question: can the dollar genuinely, from this point, pick up? The likelihood is, gold is potential. The gold has got a fairly decent likelihood of consolidating. I suppose the Swissy will have too, but at some point it's got to break to the upside or the downside. And at this stage, it's looking much more likely to break to the upside. with the dollar Swissy, because, you know, as Geoff's just pointed out, we've got trend lines being potentially broken on the dollar index on that right shoulder. Same sort of thing here that we can see with the dollar Swissy. If it gets up to this level, then the likelihood, or what I will look for, I should say, not the likelihood, but what I will look for is to see whether the neckline actually does provide some resistance. So, you know, we get this first bar getting all the way up here. Neckline provides resistance. It comes back, potentially tests that level somewhere along the line, and then we can look for trades in this area to trade it back up to the neckline and possibly through. It's got a little while left to mature, but you can see there's the left shoulder there. There's the head. And this is the right shoulder along here. So it is looking like an inverted head and shoulders right now. So the pattern has been there and forming for quite some time. The question was, can the dollar bulls actually get this moving in the direction that we wanted it to move into? And at this stage, it's certainly looking like it will. Let me bring up a chart of trading view. So we've got a dollar index as well. Might have it somewhere already, but let's bring it on here.
I hasten to add they've been trying for some time without.
Yeah, and this is the thing, isn't it? You know, this has been a battle for the dollar bulls to get this one through, and it just hasn't managed to pick up any pace. And it might be that, you know, the neckline of the inverted head and shoulders just it will provide some volatility in this area, just because of the weakness that we've seen with the dollar. You know, the dollar is relatively weak. But why all of a sudden is everybody confident about the dollar? I don't think the major position on the central bank has changed that much. But you know, let's have a look at this, and you can see how similar this is to the Swissy chart, where we get the neckline along here. So it's getting close to the top of that neckline, and we see the left shoulder, the head, and the right shoulder there. So we do have that reversal pattern, and can it get through? The difference, I suppose, with this one is that it doesn't have that neckline and then trade line or trend line to come and bounce off, but it might bounce off this one more time, and give everybody an opportunity to get in. You know, as everybody kind of missed the initial move, it might give everybody that opportunity to get in around about the 93.14 level. So the dollar by no stretch has absolutely gone. And it's one of those that if you're in trades, then you want to manage them, and you might want to start taking profit at the neckline if that's what you prefer. You can take profit at the neckline here, and, you know, maybe take half of your profit there. If it comes back, then you can re-add that half at a slightly better price, or you can just wait and see if it does break out. And if it breaks out, then obviously we're in pretty good shape. I'm not sure why I've got that 94. Let me just have a look at that trend line.
I'm not sure we'll get a second chance if it breaks out for quite some time, because I think it'll go pretty quick if it goes.
Yeah, this level's different on. Yeah, I think you're right. And that's always the question, isn't it, mate? And because of that, if this is going to go, as you say, it's going to go like it has already. You know, it's already started to fly. Can you explain what can we usually expect from a rising wedge? Yeah, normally from a rising wedge, you expect downside. You know, it's a bearish pattern. So you'll see if there is a rising wedge, something like that, you'll see price be going up and down and up and down and up and down. Now, normally it would break to the downside. And if it would break to the downside, what you're looking for is the measurement between the lower line and the upper line to be the potential for the measured move, which would normally bring you down to the bottom of the actual triangle, creating a bit of a range. So yeah, that's the textbook way to be looking at a rising wedge. Now, of course, if it breaks the upside, then it does spook a lot of people, so you can see some really bullish price action. Where are you seeing the rising wedge, Fad? We can analyze it maybe and see what.
We might have to do that in the US show. And
yeah, okay.
I think you're in. Fad's in with us. I think in the US session. I think, isn't he?
Yeah, Fad's in with us. Yeah.
Yep. Kiwi dollar. Don't talk about it, Simon. I've missed the entry. But yeah, well, I think we might get a second chance on that. We'll see. So we're
Oh,
going
the
to talk.
rising wage on Kiwi dollar. Okay. All right. Yeah, we'll have a look at that. No problem at all. But yeah, let's do that in the US show. And I've got a stock that I want to bring everybody as well, and just to kind of go over something that I was talking about a few weeks ago.
All righty, happy days. So thank you, those of you who have joined us for the second time today. Those of you who, of course, are subscribers to the US session, we will be back in a matter of seconds. Those of you who are not, we'll see you in the UK Open tomorrow at 2:55 Singapore and Hong Kong. Have a good one, guys. Back in a moment for those of you who are subscribers to the